If you are currently at the point where you have to decide whether to go into the housing market or not, here are reports from real estate experts predicting what will happen in 2022. However, these forecasts should be taken by home buyers and sellers with a grain of salt because none of these experts could predict the events such as the high home prices that plagued the housing market in the past year. What does this tell us about interest rates in 2022? Hey guys, welcome to our channel. Don't forget to watch the video until the very end so that you will not miss any important details. Some experts believe that interest rates will rise because of the following reasons. By spring of 2022, the Federal Reserve will cut off its mortgage-backed security investments, and this will lead to higher rates. A continuous rise in inflation and a volatile stock market will result in an uptick in the interest rates. And finally, any decision by the Fed to increase interest rates earlier will cause the mortgage rates to go up. Will the interest rates be higher or lower in 2022? Sean Black, co-founder and CEO of NOC, the interest rates will be higher in 2022, and this will make affordability to become a major challenge to first-time home buyers, as most of them will struggle to get a down payment. However, the real estate transaction process will be seamless. Patrick Boyagi, CEO of OwnUp, the rates will definitely increase in 2022, but it will be large enough to slow down the market. The rise in prices coming from the imbalance in demand and supply will have more impact in the market than the rates. However, even with the rise in rates, home buyers can still get access to low rates if they shop around. Todd Teta, Chief Product Officer of Atom, interest rates will remain very low in the fall and winter. Home prices will increase significantly in 2021 and will require special intervention to turn it around. With the many uncertainties surrounding the house market, such as the pandemic and the path of interest rates, prices will not stop soaring. The extremely low interest rates and the willingness of the stock market to provide resources for huge down payments will also spur the prices on. James McGrath, a co-founder of Yorivu, is of the view that buyers do not need to rush to close up transactions because everyone is predicting that interest rate and mortgage rates will go up. They should exercise more patience. Andre Bergeron, head of brokerage operations at awning.com, interest rates will be historical low, inflation will be high, and these macroeconomic factors accompanied with low supply of inventory will cause prices to be significantly high. Philippe Lord, CEO of Meritage Homes, interest rates will increase at a steady pace. Jeremy Sopko, CEO of Nations Lending, the uncertainty from the pandemic will make the interest rate to stay very low. This will not be able to keep the market active as the problem of affordability still lingers. Though the interest rates are very low, buyers will continue to turn down deals because of the fear of a glaring inflation. This is already happening in markets such as Dallas and Tucson. This therefore means that the market will slow down even with the historically low interest rates. Bill Packer, Executive Vice President and Chief Operations Officer of American Financial Resources. As interest rates rises, the problem of affordability will also intensify. As prices increase, more homes will be put up for sale by the homeowners, and this will have make the prices to drop. Daryl Fairweather, chief economist for Redfin, mortgage rates are expected to rise from 3% to 3.6% before the end of 2022. This can be largely attributed to the pandemic and the lingering inflation. High interest rates combined with high housing prices will slow down the annual price growth to 3%. This will deter spectators from going into the market, therefore creating more opportunities for young people to secure a home. Jared Kessler, founder and CEO of EasyKnock, the market will remain unpredictable in 2022, and while the low interest rate currently drives a thriving housing market, the market will slow down in 2022 as interest rates will definitely go up. As the interest rates increases in 2022, prices will continue to skyrocket as a result of the few homes available for sale in the house market. Frederick Warburg Peters, a CEO of Warburg Realty in New York City, the increase in interest rates will have an adverse effect on the national real estate market in the early months of 2022. This rise in interest rate will impact the market psychologically, making it less exuberant. Nick Bailey, president of Remax LLC, competitive prices alongside price stabilization will be enjoyed by buyers in the new year. Brent Fielder, executive vice president of Proper Title, refinancing activity will drop considerably as a resultant effect of the spike in interest rates. Notwithstanding, there would be an increase in housing sales in 2022. Lawrence Yun, chief economist for the National Association of Realtors, the Fed scales will raise the short-term interest rates and this will make the mortgage rates go up. This increase in mortgage rates will cause the home sales to reduce by 2% in 2022. However, it will remain afloat because of the investors' demands and people moving to where their jobs are. Skylar Olson, principal economist for Tomo, in 2022, interest rates are expected to rise. There would be less people buying homes now to quickly make use of the opportunity of low rates. However, more buyers are still looking forward to buying their new homes. Robert Dietz, Senior Vice President and Chief Economist for the National Association of Home Builders, interest rates are expected to rise as the Federal Reserve adjusts the monetary policy that covers inflation. The rise in interest rate combined with the higher construction costs will result in a decline in affordability. This can be remedied if the policymakers will take action to reduce the cost of land development and home construction. Any community that is able to achieve this will have more population growth and business expansion. Matthew Vernon, retail and centralized lending executive for the Bank of America, interest may be increased by the Federal Reserve in 2022. It is therefore advisable for those that have already indicated interest for a larger home to quickly make use of the lower interest rates now. Ben Miller, co-founder and CEO of Fundrise, there will be a spike in the housing prices come spring 2022. From then on, the single-family rental market will become strengthened. Susan Wachter, the Albert Sussman Professor of Real Estate at the Wharton School of the University of Pennsylvania, housing prices are expected to decline to lower rates all through the metropolitan markets. The actions by the Fed to control inflation will result in a 0.5% rise in mortgage rates in 2021 to moderate demand. If this inflation persists, there will be a spike in interest rates. Your next steps. From the details that we have covered, there will be a surge in the mortgage rates to combat the rise in inflation. So, the best time to benefit from a low rate seems to be now. For home buyers, a rise in interest rates connotes a decrease in the affordability, so it will be beneficial to shop for houses in cooling markets. Then, for refinancers, this is the ideal time to lock low rates. Currently, interest rates will surely go up. What higher rates mean for you? Fortunately, the mortgage rates will remain in track, judging by historical standards. As the rates go up, affordability will be impacted. However, wages and salaries will also increase, and this will combat the challenges of affordability. Keep in mind, economic conditions are in a state of constant flux, so these are just predictions. It is advisable to see a mortgage advisor where you live to get the latest conditions and stay up to date on your local market. If you liked the video, don't forget to hit that like button. Also, please subscribe for more videos about real estate and finance. Click the bell icon for more updates when we upload our new videos. Until then, thank you for watching and see you next time.